Hello everybody, welcome back. Let's have a look at Bitcoin. We'll make some videos on some of these other assets throughout the day, but Bitcoin I suppose is the one to watch because it's Bitcoin that's governing the entire dump as of yesterday. So that situation to me did surprise me. I didn't expect anything like that, to be honest. And from what I understand, it's largely to do with some power outage and disrupting the hash rate by about 40% or something along those lines over in China. So, essentially a black swan event, really, is what it was. So, I mean, there may be some people who are able to, who were able to predict that or get on the right side of it at the last minute if you're looking at hash rates and things. Other than that, there was nothing on the chart to suggest anything like this was ever going to take place. So it happened, it's real, and so now, let's apply what we do onto the chart. So usually after a black swan event, it's something that doesn't match the chart's progression. So whether that's Elon Musk pumping the price like this, only to come back down again, or Chinese hash rate dumping the price, only to be bought back up again. Either way, what happens is you can force the price in one direction for a very short period of time. Overall, I always hold way more power over the general direction and the direction of trend and the strength of trend. So that said, this, as scary as it was and as crazy as it was, is much like this, crazy and scary as it was. This progression would have happened without Elon Musk saying, "I've bought loads of Bitcoin," and then everyone goes crazy, and then it just comes back to where it started from, and then continued with its overall progression. Again, same with this. We've got higher lows. We've also got higher highs. We've even got a higher low over here. So without this wick, which again is a black swan event, it's a dump event, just like this was a pump event. I don't really consider it to be particularly scary overall with the grand scheme of things. So I'm not bearish at this point. There's no reason to be bearish in my opinion over this point. All that's happened, if anything, is that it slowed the inevitable move up down by maybe a week or two. It's disrupted that, and the reason it would have done that, because like I say, the direction to me still remains to the up at the moment. Still remains to the up. The reason it's slowed it down is because there's a lot of people who've lost a lot of money, and without that money, it does take a little bit of time for that money to trickle in. Now, speaking of money trickling in or trickling out, I did bring this up on the video yesterday, and this is something that I'm very much in favour of, very much, and this is my biggest case for a massive move to the up. Right, so again, I put my neck out when I make videos, every day, because I make these videos every day, and obviously I'm not right every single day. In fact, there are days where I'm clearly wrong, but it's about getting putting the pieces together to build the best picture of what you expect to happen. And this has given me this is the best picture I have now for a large move up, right up to the top of the Bollinger Band and maybe beyond. So we're talking $70,000 or beyond, right, over a period of weeks. And it's this money flow index. So again, we touched on it yesterday, and the weekly closed yesterday, and now we've got a brand new week. And look at what's happened. So this money flow index on a weekly goes back all the way to, well, the first time I suppose we tagged it was around about September 2019, so it's a long-standing trend showing money coming into the asset. We also are able to find significant tops with the money flow index when we reach above 94 to 96 on the money flow index. Is usually an area of any asset to get the hell out as fast as possible, because it's very unlikely that it's going to go up a great deal. It may go up 100% more, but there's a very good chance it will come down more than that. But we're not there. We're not anywhere close to tops. What we're looking at now is potentially a bottom. So the money flow index isn't the best indicator to spot a bottom. But generally, when we're looking at this when we're looking at it on this scale here, what we do see is that there is a trend line that seems to hold every time there's a dump. So we had a red candle here on that week, so it's matched that out there. We came down a little bit further, hitting the trend line, and then we had a move up. Now obviously these look small, these are tiny, aren't they? These are very, very small, so we're going to have to zoom in to give a bit of perspective onto what these moves actually were. So if we have a look, that's the top, that's the money flow index bottom, between here and here, and then we had a move up from the wick to the wick. That was a 40% move. So again, it's deceptive, isn't it, when we look at these small candles and these small wicks? But it's deceptive, but that's what happened. So then we came back down again. We tagged the low, the money flow index low. Okay, so again, this isn't the best way to spot a bottom, as you can see, because we hit the trend line there, but we did move up. So let's face it, the money flow index hit a low here, and we moved up by 61%. Fair enough. Now this is a black swan event, isn't it? This is the March crash. But what happened after the March crash? We hit the trend line. So again, it's a higher low on this trend line, even though the lower low, the lowest point here was the March crash. This was a lower point than any of these where the money flow index spotted a low. But again, we hit the money flow index here on this trend line, and then we bounced. And this was a decent bounce. Obviously, it was a black swan event, just like yesterday, and the money flow index bounced all the way up to this level here. This was the top, this was the peak, a 230% move from that trend line being hit. And then what happened? We dipped down again. Money flow index tapped this level again here, spotting that area, and then, well, I mean, we don't really need to measure it. We know what's happened. But it was a very, very big move since the last time that trend line was tagged. So you can see that, again, this is weekly, so we're not particularly worried about what's going to happen, on the 15-minute chart or even the 4-hourly chart, really. We're looking at this on a weekly basis for spot trading, really. But what it does suggest is that, if we look at this, it's been going on since 2019, and we have a trend line that's been respected even in the face of Black Swan event. We still have a higher low on here, and a dump, and then a bounce, and a dump, and a bounce. What have we got here? We have a Black Swan event bringing us down to this trend line, and now we're getting our first little uptick, because again, this is a new weekly, so the weekly is beginning. This leads me to believe, because this is all I've got to go by, price, volume, time, all indicators are developed over those three components to measuring an asset. So all we've got is those three things, and so we're going to put those three things together right now. So we've got this, which is very, very, in my opinion, this is as good as any opportunity to get involved and hope that we're going to continue with this trend line and bounce every time we hit it, just like we have since 2019. As far as the moving averages are concerned, we're above all of them, more or less. We're above all of them on the weekly. Weekly's still looking pretty good. The only thing that would particularly look a little nasty is this MACD cross. Well, it's not even crossed, but it's diverging, isn't it? It's not looking. It's converging. Sorry. So it's not looking particularly strong, obviously. But I'm not really concerned with that. That's just the MACD. I mean, it is what it is, and that's I can't change that. But in my opinion, there's stronger things at play, which is the posturing of the chart, the money flow index bouncing here on this multi-year support trend line, and RSI is not it's bearish, as in like we do have bearish divergence, but we also appear to have a very subtle and rough fix on where this may get rejected, which it would be on this trend line, which at the moment is we're quite far away from it. And as far as the MACD is, the RSI is concerned, we're not overextended. Not as far as cryptocurrency is concerned, not as far as Bitcoin's concerned. We're not overextended there. So I'm in favour of this, not just bouncing, but bouncing pretty hard over the next few weeks or so. Now, obviously, like I said at the beginning, my neck is always on the line when I make these videos, and it is a bold statement that we are going to make a new all-time high, like a significant one, and possibly one to remember, and then maybe get rejected significantly from there, given the bearish divergence we got on the weekly. So let's just bring it down a notch, and we'll have a look at the daily. For what it's worth, this was our formation that we broke out of. We came down to retest it 2 days in a row, and then we broke down significantly again. Black Swan event, but it happened. So now what's going to happen, again, like I said at the beginning, it's going to be a bit slower in recovering from that. There's certain milestones that we need to to reclaim, and first of all we need to get back into the formation. At the moment we've been rejected from this uptrend of what should have been and what was previously support. It's now resistance. Okay, so that's a bit of a problem. That comes in at about $57,300, but it's an uptrend, so we get more every day. We're also below all major moving averages actually, so well, not all. We've got the 50 here, which we're being supported on here, the 50 exponential, which is good to be supported on there. That's happened in the past. Bang bang there, came close to it here, came close to it here, again being supported from it here, so that's good. It's okay to be supported there. We've seen many altcoins over the last 3 or 4 weeks come down to that level and then rally significantly, so I'm not too fussed about that. It's also the bottom of the Bollinger Band as well, so we're still looking okay as far as that's concerned, but we do need to reclaim this trend line, then obviously the center of the Bollinger Band, and then get above all major moving averages. And again, like I say, it's going to be a bit slow and steady, maybe a bit of an accumulation phase around this zone, but personally I'm not favoring any strong downside. Worst case scenario, we do come down to maybe test the low area of 50,000, the low area, but I'd be very surprised if we came down to our previous low of yesterday's wick. We could come down maybe to areas of around 52. But obviously if we start to break down further than that, then it might suggest that a downtrend has begun already, and my analysis is completely void, and we'll have to flip our the way that we are going to play this from there on, because it could be a downtrend at there. There's nothing to say that this is a downtrend right now, nothing to say that we have entered a downtrend at the moment. I mean, we could go down even further to a 4 hourly and it will look more bearish on the 4 hourly. Again, we're below all major moving averages more or less on the 4 hourly, but this is to be expected after a move like yesterday. So you can see everything's crossing, and if we can't reclaim this 200 exponential, which is I'd really like to see us get to 58,000 and remain above there, because if we stay down at below 58,000 for a period of I suppose maybe the next 7 days, we would likely get a death cross at that point, and that very much would start a downtrend, and we could look at that at that point. But again, that hasn't happened.